Welcome to our exam prep episodes. Check back for more as time goes on. We're laying the foundation, the most important real estate glossary terms you'll see over and over on your exam. These are the high-frequency words that appear in questions about transactions, financing, contracts, property types, and more. If you're studying right now, grab a notebook or open your Notes app. Pause and repeat definitions out loud. That's one of the best ways to lock them in. And if you're driving, just listen and drive safely. Section 1. Core transaction and process terms. Let's start with the backbone of any real estate deal. Escrow is a neutral third party that holds money and documents until all conditions of the sale are met. Think of it as a safe holding area, so neither buyer nor seller has to trust the other completely. Earnest money is the deposit the buyer puts down to show they're serious about purchasing the property. It's usually applied toward the down payment or closing costs if the deal goes through. Contingency. This is a condition that must be satisfied before the contract becomes fully binding. Common examples: the buyer must get financing approved or the home must pass inspection. If the contingency isn't met, the buyer can often back out without losing their earnest money. Purchase agreement, also called a sales contract, is the legally binding contract between buyer and seller that spells out the price, closing date, contingencies, and other terms. Closing is the final step where ownership legally transfers from seller to buyer. Documents are signed, money changes hands, and keys are handed over. Closing costs are the fees paid at closing, things like loan origination fees, title insurance, appraisal, and recording fees. They typically run 2% to 5% of the purchase price. Title proves you legally own the property. A title search checks public records for any liens, claims, or problems. Title insurance protects the buyer and lender against future disputes over ownership. Deed is the actual legal document that transfers ownership from seller, grantor, to buyer, grantee. Counteroffer happens when the seller responds to the buyer's offer with different terms. It rejects the original offer and creates a new one. As-is condition means the seller is not making any repairs. The buyer accepts the property in its current state, but smart buyers still get an inspection. Quick quiz, Section 1. Pause the podcast and answer these out loud. What is the neutral third party that holds funds and documents until the transaction is complete? What deposit shows the buyer is serious and is usually credited toward the purchase? What is a condition that must be met before a contract becomes fully binding? What is the final step where legal ownership transfers and keys are given? Great job! Here are the answers: escrow, earnest money, contingency, closing. If you missed any, go back and review those definitions before moving on. Section 2. Property types and ownership. You'll get questions distinguishing different kinds of property. Real property, or real estate, includes land plus anything permanently attached to it: buildings, fences, trees. Personal property is movable stuff: furniture, appliances, unless they're fixtures. Residential properties are built for people to live in: single-family homes, townhouses, condos. Commercial real estate includes office buildings, retail stores, restaurants, and shopping centers. Industrial properties cover warehouses, factories, and distribution centers. Single-family home stands alone on its own lot. Townhouse shares one or two walls with neighbors but has its own entrance and usually a small yard. Condo. You own your unit inside a larger building and a percentage of the common areas. The Homeowner Association, HOA, manages shared spaces and enforces rules. Equity is what you actually own in the property. Market value minus what you still owe on the mortgage. Market value, or fair market value, is the price a willing buyer would pay and a willing seller would accept in an open market. Quick quiz, Section 2. Pause and test yourself. What type of property includes land and anything permanently attached to it? What is the term for movable items like furniture that are not part of the real estate? What do you call homes that share walls but have their own entrance? What represents the homeowner's financial stake in the property? Value minus loan balance. Answers: real property, personal property, townhouse, equity. Nice work. These distinctions show up frequently on exams. Section 3. Financing and mortgage terms. These show up a lot. Mortgage is a loan secured by the property. The borrower is the mortgagor. The lender is the mortgagee. Down payment is the buyer's initial cash toward the purchase price. The rest is financed. Debt to income, DTI ratio, compares your monthly debt payments to your gross monthly income. Lenders use it to decide if you can afford the loan. Loan to value, LTV ratio, is the loan amount divided by the property's value. Higher LTV means more risk for the lender. Private mortgage insurance, PMI, is required on conventional loans when your down payment is less than 20%. It protects the lender if you default. FHA loans are backed by the Federal Housing Administration, great for buyers with smaller down payments or lower credit. VA loans are for eligible veterans and often allow zero down payment with no monthly mortgage insurance. Fixed rate mortgage, the interest rate stays the same for the entire loan. Predictable payments. Adjustable rate mortgage, ARM, starts with a lower rate that can change after an introductory period. Annual percentage rate, APR, shows the true yearly cost of the loan, including interest and certain fees. Amortization, the process of paying off the loan over time. Early payments are mostly interest. Later ones reduce the principal more. Appraisal, a professional opinion of the property's market value. Lenders require it to make sure they're not lending more than the home is worth. Points, fees you can pay upfront to lower your interest rate. Each point is 1% of the loan amount. Closing disclosure, the lender must give this to the borrower at least 3 days before closing. It details the final loan terms and costs. Quick quiz, Section 3. Pause the audio and answer. What ratio compares monthly debt to gross monthly income? What insurance is required when a conventional loan has less than 20% down? What type of loan is often available with zero down payment for eligible veterans? What is the term for a mortgage where the interest rate stays the same for the life of the loan? What professional evaluation determines if the property is worth the loan amount? Answers: debt to income, DTI ratio, private mortgage insurance, PMI, VA loans, fixed rate mortgage, appraisal. Solid effort. Financing terms are heavily tested. Reviewing these will pay off big. Section 4. Key players and legal/regulatory terms. Real estate agent, a licensed person who represents buyers or sellers. Real estate broker, usually has more education and can run a brokerage or supervise agents. Multiple listing service, MLS, the database where agents share listings with other agents. Real Estate Settlement Procedures Act, RESPA, federal law that requires clear disclosure of all closing costs. Seller disclosure, the seller must reveal known material defects about the property. Zoning laws, local rules that control how you can use land, residential, commercial, etc. Comparable sales, comps, recently sold similar properties used to help determine value. Days on market, DOM, how long the property has been listed, can affect pricing strategy. Quick quiz, Section 4. Pause and answer these. What is the database agents use to share property listings with each other? What federal law requires lenders to disclose all settlement costs before closing? What document requires the seller to disclose known problems with the property? What are recently sold similar properties called when used to value a home? Answers: Multiple Listing Service, MLS, Real Estate Settlement Procedures Act, RESPA, Seller Disclosure, Comparable Sales, Comps. Excellent. You're building a strong foundation. Section 5. Quick Review and Exam Tips. Here's a fast recap of the top 15 must-know terms for your exam. Escrow, earnest money, contingency, closing, title insurance, equity, appraisal, PMI, DTI ratio, purchase agreement, deed, fixed rate versus ARM, FHA versus VA loans, as is, comparable sales, comps. Exam tip. Many questions test the difference between similar terms, like title versus deed, real property versus personal property, or market value versus appraised value. Also watch for who does what, Who pays PMI? Who provides the closing disclosure? Who holds earnest money in escrow? Practice by explaining each term in your own words. That's how you move from memorizing to truly understanding. Final quick quiz, overall review. Pause one last time and define these 5 key terms out loud. Contingency, equity, appraisal, title insurance, purchase agreement. Answers. 1. Condition that must be met before contract is binding. 2. Value minus loan balance. 3. Professional opinion of market value. 4. Protects against ownership disputes. 5. Legally binding contract outlining sale terms. That wraps up episode 1 of the Real Estate Exam Prep podcast. If these terms already feel clearer, you're on the right track.